The wrong screen. You got your coffee? All right, well, let's get going. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of lowering our risk. Because trading is risky and not appropriate for everyone, your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So my name is Wayne McDonald. I am a currency trader just like you. Some of the things I would like to cover maybe today, besides just technical and fundamental analysis of macroeconomic conditions to predict global cash flows, I thought we'd look at the calendar for the rest of the week. Also, I thought since last week we talked about an intra-market arbitrage, I thought today we could talk about a merger arbitrage going on today. What do you think about that? You let me know if you want me to cover that. Also, I popped a poll there about what's on your mind. Let me know what's on your mind. So on and so forth, right? No, Johnny, I put WTF, but more like I don't know what's going on. But yeah, I didn't even think it'd be. Yeah. Anyways, that's pretty funny. It is funny. Yeah. I didn't mean WTI, but I could see how that. And so, anywho, cool. So let's have a great trading day. Lots going on. Great opportunity to be a trader. These markets are awesome and cool. Lots of interesting things going on. Lots of rewards if you got it right. So very cool. With that being said, take a look at the links below the video. These are important links. One is to my current book I wrote in 2006, I think. Something like that. It's pretty good. It's pretty good. It is, let's say, focused on telling you how the markets move using fundamental analysis and technical analysis. That's, I think, about the first. I think 1/3 of the book is technical analysis. 1/3 of the book is fundamental analysis. And 1/3 is essentially trader psychology, because it teaches you how to improve as a trader, how to Forex your experience. And what that means is get 4 times the experience in 1 year. So if you follow the book, you'll get 4 years of trading experience in 1 year, and therefore be significantly better. There's a methodology to it. So cool. That it's insightful. What's the link? Well, it should be in the description below the video. So that would be to the Amazon.com. So you can buy it new, you can buy it used. It's not my book. Remember, I wrote it and I sold the rights to Wiley Publishing. So it's their book. So buy it, don't buy it. But I did write it. And it's, it's a truthful, honest book. Cool. Right on. There's in the description, there's a link to FX Bootcamp. It will help you become a better trader. $88 buys you access to, 88 hours. It doesn't say 88 hours. I under promise and over deliver. So right now it's about 88 hours of videos, and they're hardcore. Some of them university level education, made simple, fun, and easy. But look, they're not just some kid going rah rah. Here's how I scalp 27 pips and get rich quick, and no, like a real education in things like monetary policy. Like, for example, in the monetary policy course, within about 4 hours of lecture, you're already learning how to manage the balance sheet of a commercial bank. Think of that. And we spend probably an hour, hour and a half of me teaching you how to manage the balance sheet at a commercial bank, so that the next lecture I can teach you how a central bank is similar yet different and how they manage their balance sheet. So when you right now when you hear that the Fed is unwinding their balance sheet, well, you know what that means because you're educated, because you are a member of FX Bootcamp. So, dude, I promise you it's worth at least $100. Right? Like when you're in university, maybe you forgot. If you're taking a university course, which costs you thousands of dollars, your textbooks cost $350 per textbook. So look, $88 is a fair price. And you will receive more value than you pay. Cool. Awesome. And then the last link is also an important link. You need a broker. You need one that will execute your trades quickly without slippage. You want someone that doesn't trade against you. You want someone that pays you swaps. Okay? And Trader's Way provides all of that. More importantly, because, a lot of brokers will promise that. It's not universally true. Trader's Way does perform well. And I have seen third-party analysis that proves that Trader's Way is faster than most, especially the big, huge names that put tens of thousands of traders all on the same MT4 server. So it just slows it down. No, Trader's Way is fast. They're boutique. They're fast. Cool. But I trust them based on their behavior when the markets were in great duress. Other huge brokers went out of business, and Trader's Way was absolutely perfectly fine. Boom. Thank you, Trader's Way. So I recommend them. Click the link. Don't click the link. You don't have to mention my name. You don't have to. You can go in incognito mode to make sure that nobody tracks you and all that kind of stuff. That's fine. Okay. Okay. Heather says it's really expensive to trade with Trader's Way. Well, we can go through and take a look. Some things maybe, right? That's up to the liquidity partners, but other things pay very, very well. So, yeah, I'm not going to argue with you, Heather. Heather's typing in the chat that Trader's Way is expensive. Well, we can take a look at that. In some cases, that might be the case, but in other cases, that it pays very, very, very well. Well, yeah, but Heather, you're shorting the. Okay, all right. Let's address that. Heather says if you long gold, you pay a negative carry. Yeah, you're shorting the US dollar, Heather, which has one of the highest swaps in the entire world. But let me get this out of the way. I just want to cover that. So I'm short gold, Heather, and so XAU, and I'm earning swap because I'm buying dollar. So you have to understand how it works, Heather. If you're buying gold, you're selling dollar, and there's a huge negative swap. It's difficult. I mean, there's no major currency that has a higher cost. Yes, of course, Heather. You designed that trade. That's you. That's not the broker. You're selling the US dollar with the, like 5% yield. So so what you're doing, like, think of it, Heather. You're putting up collateral to borrow $10,000, let's say. So you're being charged $52 a day, so you must be a standard lot, let's say. Okay, so you're putting up $1,000 to control $100,000, and you're paying swap because you're borrowing 100,000 US dollars at 5% a year. That's what you're doing. And now you have $100,000, which you've borrowed, and you're buying gold with it that has no yield at all. So you designed that structure. So that's not trader's way. Okay, so make sure you understand what's going on. So I'm doing the opposite than you. Okay, I only have a mini lot. So, right, I only have to pony up $100, and I've already earned $30 since the 8th. So I've held it for 2 weeks. Okay, and I already have a 30% return on the capital that I used just on my swap. So, and I'm up $600 in asset appreciation. So my dollar's gone up in value. So winner, winner, chicken dinner. So if I had one standard lot like you, I'd be up $300 in swap in 2 weeks. So just be careful. Make sure you understand. Okay. You designed that trade. You structured that trade. Those are the costs, what they call those carrying costs. How much does it cost to carry that trade? Okay, cool. So great. I'm glad you brought that up, Heather. So thank you. Okay, hopefully, I think I came across pissy. I didn't mean to do that. But cool. Great. Because a lot of people don't understand that. So anyways, thank you for doing that. And let me get back to where I was going. All right. So right now, the biggest losers. Okay, Nasdaq, S&P 500, and Dow. So right now, so far in the live markets, even though they're not technically open yet, right? These are the continuous contracts. Nasdaq down 1.69%, S&P 500 down 1%. Now check this out. Kiwi down 0.5% versus yen. Kiwi down 0.5% versus CAD. Kiwi down 1/3% versus Swiss franc. Kiwi down 1/3 versus the US dollar. Aussie down versus the yen. Aussie down versus the Swissy. Aussie down versus the CAD. Aussie down versus the US dollar. What do you think? Aussie and Kiwi are weak, huh? James says he's not with Trader's Way, but his broker charges for a long position. Yeah, but that's what I'm saying, right? That's what I'm saying, James. That's what you're doing. You remember, you're trading two assets. Now, you might have a broker that has liquidity partners that might be able to sell you gold in euro, or gold in Swiss franc, or gold in Japanese yen. Okay? No, but James, it's not most likely. That's the cost of doing the trade. That's not your broker going, hey, we should charge a negative swap on the upside. No, that's not a broker's decision. That's the cost of doing the trade. There are costs. Okay? So that's just the swap. That's just swap versus swap. So anyways, so they will always charge. But you might have a broker that has more liquidity partners, and if you did like gold priced in Swiss franc, it would have a lower negative carry if you want to be long gold. So you'll have to structure the deal differently, right? Just think about it, guys. It's only money. Yep. Thank you, James. Yes. It's just the structure of the deal. That's it. You're borrowing. Now, or how about this? Don't use any leverage. If you want to control a $100,000 position and you have US dollars in your account and you have no leverage, then you wouldn't have that carrying cost. But then again, you have opportunity cost, because you could have just put that into, instead of buying gold, you could have just bought, like right now, you can buy a 2-year treasury paying you 4.5% or something. The 10-year is back to almost 4% today. Right? In fact, maybe I can add that back. I think if I add this back, we can track it. 10-year yield. Look at this, 3.94, right? 3.9.5. Holy smokes. So even then you could say, well, the opportunity cost could be, 4% instead of the 4 3/4. So you could lower it, but there's a cost. There's a cost to everything. Okay. Yeah, tidal wave, that's going to come now, I think, the second Wednesday of March. But you've seen the website, though, right? Tidal wave? Davey boy. Right, Dave? You've seen that? It shows you what it is, right? It drops the skirt. You can see under the hood. But does it explain? No, not yet, no. But it's coming. Yeah, Richard, we could talk about the hedge fund playbook getting yields. I'm actually doing a lot of work on that right now, and it's pretty fascinating. And so we can talk about that maybe today, maybe not today. I do want to do a merger arbitrage example today, if you guys want to hang around for that. How many people would like a little merger arbitrage? Okay, well, anyway, so we can see looking at this, and this is real time, Aussie and Kiwi are weak. There's no doubt about that. Neutral, euro dollar, CAD, Swissy, USD, Swiss franc. These are all neutral, stuck in the middle. DAX is up. FTSE is up. And check this out. Pound strong, pound strong, pound strong. Now notice, pound strong versus Kiwi. Pound strong versus Aussie. But we already know Kiwi and Aussie are weak. So if you know pound is strong, why is pound strong? The FTSE's up. So, of course, the pound is strong. And, of course, it's strong against Kiwi and Aussie because we already know they're weak. We already know this. Okay? Euro stronger than Kiwi. Euro stronger than CAD. Of course it is. This is just relative strength. Pound is stronger than USD and Swiss franc because they're pretty neutral right now. Pound is stronger than CAD. Pound is stronger than yen. So, dude, you're buying pound, right? You see how you can learn this in just seconds? And this is real time. Okay, it updated, well, I can refresh it here. Just to make sure you get a date. So notice I'm not on a web page. I'm in the data. Okay? I'm in the live database, pulling all the stuff in real time. It's doing the calculations. I think my internet's slow because I'm, right? And look, so it's updated right here at 8:30 and 22 seconds. So this is live, right? This is updating. Boop, 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 boop. In fact, pound Kiwi just jumped forward. You just jumped past the FTSE. So the pound is even stronger, or Kiwi Aussie's weaker, okay? The story is the Bank of England may have to keep raising. Yeah, but we knew that. But it went from confusion to, I suppose now they're deciding that they have to jack up those rates, huh? So if you look at the scatter plot, okay, DAX is supposed to do well, and it is doing well. Okay. FTSE is supposed to be doing poorly, and it is doing poorly. So anyways, this is working out. Okay. It was a good day. Didn't even need my AK. All right. So a quickie here. Oh, let me see your poll. Sorry about that for those that participated. Thank you. Let's see what's going on. What's on your mind? Euro. Okay. Okay, that's fine. WTF, I guess you're answering that like it's oil. What I was thinking is you didn't know, but whatever, that's pretty funny. So, okay, we'll just interpret that as oil, WTI. Okay, nobody interested in SPX. You're not really, I find that fascinating. Okay. See, if you own a retirement account, maybe the average person here is young, or maybe you're just not trading at but I intertwine everything, right? So everything is everything. So to me, it starts with SPX kind of thing. And gold. Okay. A little bit of gold, a little bit of the stock market. Quite a bit of interest in oil and energy. All right, so we'll get to all those things. I will cover that. I guess I'll leave this gold thing up for now. Okay, so this came out today, right? It came out last night. Yeah, it came out last night. Okay. Pfizer wants to buy Seagen. Cool. So here's the play that should be happening today. The market's not even open yet. Okay. One of these, so an arbitrage, by the way, is buying and selling at the same time. Okay. So here's how this works. Pfizer is thinking about buying Seagen. What does Pfizer give Seagen? Well, they have to buy the stock. If it's a privately held company, they just negotiate a price with the founders and the investors, like venture capitalists or whatever, but they just buy it. They just negotiate a price, boom, they buy it. Easy peasy lemon squeezy. If Seagen is a public company, it's done an IPO and the shares are trading on the market, then it's a little more complicated. So if Seagen was trading, let's say at $18, we'll look this up in a second, but I'm just saying, I just threw out a random number, 18 bucks. Okay. Then Pfizer has to find a way to buy all those shares from everybody that already owns the shares at 18 bucks. Now, how do you buy all of them? You can't buy half of them or most of them. You have to buy all of them if you're going to own the company. Otherwise, you just own stock. They want to own the whole thing. They want to make managerial decisions, right? They want to own the cash flow, so they got to buy it. So what Pfizer would do in this case, because this is the target company, they would go to the market and convince the shareholders to sell their shares to Pfizer. And so they'll come out and they'll say, we'll pay you $25 right now for your shares. Well, that's a heck of a deal. I mean, they're only worth 18. Right? WTST is like, sold, right? Sniper takes it. Sniper, no sniping. Okay? So anyways, right? And it's sold. So now what? How does this arbitrage work? So you want to buy one of them and you want to sell the other at the same time. Has anyone watched the classic movie, Wall Street? With Gordon Gekko? Gordon Gekko did arbitrage, merger arbitrage. So what he would do is he would quietly buy up shares in a company. Remember, he said, spread it out, buy some offshore, use some of our, right? So they would say they would have accounts at different brokers and onshore and offshore and all that kind of stuff. And they're buying shares, but they don't want, like in this case, Seagen to know that they're buying up the shares, right? That kind of stuff. Because they don't want to pay 25, they want to pay 18. You see what I mean? So someone doing merger arbitrage would be buying these shares at 18, slowly pushing the price up to 19, 20. But if they can get a whole bunch of it before they have to pay the premium, then they're getting it cheaper, right? You see what I mean? All right, so in that case, Pfizer might already be buying up their stock, having brokers do it for them. And, you know, if it's illegal, or if Pfizer executives are doing illegal things, you know, they could have their cousins buying Seagen stock at 18, knowing that Pfizer is going to buy it at 25. But nonetheless, what happens is Seagen stock will go up. Up and up and up to the point where it gets up to, and not higher than 25. No one will sell their, right? I mean, the stock's being bought at 25. That's the price. So what you do is you buy Seagen today, for example, if you can still get it at 18. Usually this arbitrage happens so quickly, but by the time you figure it out, it's already happened. So your real job is to know that this is going to happen before everybody else. How did Gordon Gekko do it? How did Gordon Gekko start buying up stock? Because remember, he wasn't doing the acquiring. He was, right? He was trying to figure out who was going to do these deals before it happened. So do you remember Bud Fox driving around in his motorcycle, going to Le Cirque, the restaurant, following the British guy up the elevators to see what floor he was going to visit so they could figure out what he was doing? He was, and followed him out to the private jet, figured out where the jet was going. What was he doing? Well, in this case, let's say that British guy was the CEO of Pfizer, and Bud Fox was following that guy around while he was in town, finding out that he was having meetings with Seagen executives, lawyers, and bankers. You would say, oh my God, Pfizer's going to buy Seagen. You see? So you have to figure out before everybody else. So now that it's printed on Market Watch, every idiot, including myself, already knows what's going to happen, which means this deal has probably already happened. But what if you knew this 2 months ago? And let's say the stock, or let's even 6 months ago, you notice they were talking. Back then, Seagen stock was at $12 a share, you know, because the stock market's down. Pfizer has a bunch of cash. They want to convert, you remember, cash is trash. So they want to convert that into cash flow. So they're like, we want to buy Seagen. So maybe you're like Bud Fox following Pfizer executives around, or they're lawyers, or they're bankers, or something like that. And you try to figure out who are they going to buy with all that cash. And you might already know at $12 a share, and you're like, oh, snap. Pfizer's going to go after Seagen. Seagen's a target. So you start buying Seagen like crazy at 12 because you believe it's going to pop to 25 because you already know. Okay, whatever. That's what the movie Wall Street is kind of about. So what happens to Pfizer? Pfizer gives up cash because they might have to pay $25,000 a share times 100 million shares. Okay, so that would be 2.5 billion. Pfizer loses 2.5 billion right now out of the bank account. Sure, they're getting future cash flow, but what happens typically is not, so the arbitrage part is that you believe Seagen's going to pop, but Pfizer's going to drop. So you're simultaneously buying Seagen and selling Pfizer. So today I would expect Pfizer stock to drop, and CGen stock to rise. And we call that merger arbitrage because it's based on the merger or the acquisition. And in the 80s, this was one of the biggest models that the hedge fund industry did on Wall Street. That's why you had the movie Wall Street was about merger arbitrage. Huh? Is that cool? Can I create a Pfizer? Oh, I have to log in for something like that. You have to log in. So we could try this. How do you spell Pfizer again? PF, Pfizer stock. I guess it'll probably tell us that way. Okay. So, okay. Oh, see, people already saw it coming. All right. And then we will go CGen stock. Okay. And we'll go 5 days. So over the last 5 days, CGen stock has been generally up. Over the last 5 days, Pfizer stock is generally down. What you might expect today is Pfizer drops below 40 and CGen goes up today. Maybe, I don't know, to whatever the acquisition price is. Oh, so maybe we try this again. Pfizer, CGen. Let's try it again. Okay, see, 30 billion. Okay, that's interesting. So I got that one right. At what price are they buying CGen? Oh, blocked. Okay. Okay, Barons, I won't show the world your website for free. Okay, so what we're looking for is the acquisition price. So 30 billion. So look, CGen has a market cap of 30 billion on Friday. And they were going to be taken over at 40 billion, but it failed. See, CGen's been down 10%. Cool. And so you got to figure out a price. Anyway, so I guess you got to figure out the price. So if they sell for less than 30 billion, so let's say 28 billion, divided by the shares outstanding, you'd find the share price. Yeah, so there's a 30 billion market cap. So you would think Pfizer would have to pay more than 30 billion. So again, closer to the 40 billion that Merck tried to pay. Maybe even higher. So let's say let's say the deal's at 45 billion. Then that's 50% more than it's worth now. So therefore, this stock has to go up $80 a share. Meanwhile, Pfizer's going to get hit because it just gave up 45 billion in cash. So then Pfizer drops. Okay. So that's the play. Can I get some love for merger arbitrage overview? So last week I showed you the nat gas intra-market merger arbitrage or intra-market arbitrage, where you buy American nat gas and you sell European nat gas at the same time. And today you got a little merger arbitrage. Lovely. Is that right? Jimmy says it should pop 13% today. Nice. Anyways, I guess we're here on gold, and a lot of you guys were interested in gold. Let me just kind of refresh this. And we are currently 1 standard deviation below the mean and on our take profit mark. Remember, the target was 1812, 1813. This started at 19.5 with a general target of 18. Very cool. So, job well done, everybody. Job well done. Okay. Okay. Big move off NFP, followed by a rally into the role reversal. So. Okay. And short for 2 weeks. Again, we can just very quickly look at this. Short for 2 weeks. Where's my XAU? Okay, roughly $600 in appreciation. But look at this. In those 2 weeks, I've earned 30% of the collateral that I ponied up, my margin. So remember, I used $100 of cash. I've already earned $30 back on gold. So I got a 30% return on investments, really internal rate of return on the $100 already. But then I've also made $600. So I have a 600% internal rate of return, okay, on that trade. Hey, good 2 weeks, huh? Cool. Very cool. So anyways, that's that. I'm a bear on oil. I'm a bear. Now we got to get back below. I guess I got to grab. No. I'll never be able to get that. Guess I'll change the time frame. Okay, we got to get below this area. Okay. Or I guess we could kind of take it down like this. Got to get below before we can really resume. But notice on this time frame, we're just kicking off the moving averages. Nothing more than that. On the higher time frame, we are in a range, but there's some hope. I don't like trading in a range. But if you're using fundamentals or seasonality, there could be a couple of things going on. Like right now, I know the fundamentals say WTI should fall. I proved it 3 weeks ago, maybe 4 weeks ago. I'm like, on the long run, I'm a bull on energy. But right now, oil should fall. And I showed the facts. Facts, like literally facts. Okay. Now, you might have something different. You might have like seasonality where you're like, Wayne, this time of year, over the last 20 years, there, 18 out of 20 years, WTI falls around now. Okay, so you're like, so that's your basis, if you will, of the trade. But nonetheless, this is sideways, so you could just remain totally neutral. That's technical analysis. And that would be correct using technical analysis. What I teach is using technical analysis, this will move sideways forever. But we know that that's not true. It will move sideways forever until it breaks. So what if then you used fundies or seasonality? And you said, based on that, this is definitely sideways, but you're directionally tilted to bearishness. If that was your play, how would you do it? And you as long as the moving averages are kind of working, you can try it. It's not a great technical technique, but I know people do it. What I teach in the technical analysis course is you should just, okay, allow it to break. Just wait, and then if it does go lower, wait for the pullback, and then the blue part is where you execute. But you can execute here because you're overriding the technicals because of things like fundamentals and seasonality. So I am a burr, and if the stock market comes down today, oil's coming down today, most likely. Now, oil is its own beast, but that's that. All right. Here's that intramarket arbitrage. I set it up in July. Okay. And this is the candle. That one, not the spinning top doji. Okay. So we talked about it in July, but you need a catalyst for a merger arbitrage, right? Like if nobody finds out Pfizer is going to buy Seagen, then the stock's not going to move. People have to believe it's going to happen. There needs to be a catalyst, right? Because if you bought the stock 2 weeks ago, nothing was trading based on the arbitrage, but now it's full on arbitrage, right? So you need the catalyst. So in July, think of this. I gave a big presentation on the arbitrage trade of why it was going to happen. And all we had to do is wait for the catalyst. And then on this candle, we met in the day trading group. And 20 minutes before the day trading group met at 4 p.m., the catalyst happened. And the first thing I talked about and the last thing I talked about in that meeting, and I mean in great detail, and some boot campers put money on this. I said the catalyst has happened. And even though nat gas has been down, okay, down, like crazy down, right? Crazy down. I said, here it is. That's the thing in July we were talking about. Holy schnicker schnocker, okay? Okay. And since then, in the last few days, nat gas is up 30%. You're welcome. Okay. But Sniper, the issue is it's something that can be casually, not even casually, seriously discussed 6 months in advance. And we clearly knew what the catalyst was. And look how precise it was. Okay? We got the catalyst at the New York close, and at the London Open it took off. Just like that. 6 months in advance. That clean, huh? Lovely. Okay? It's not magic, is what I'm trying to tell you, right? Okay. Frank says, do I buy nat gas on my retirement account? No, I'm an investor on my retirement account. I'm not a trader. There's a difference. Okay. Also, with my retirement account, I can put it into like professional, we have money managers. I can put it into hedge funds, all that kind of stuff. But no, it's not a trading account. But you can also open up trading accounts, right? You have corporate trading accounts that pass through to you personally, right? So that's actually, it's tax season now. So, the cool thing about the retirement account is I'm avoiding taxes. Okay. So here, just a quick word on that. Okay. It's so wonderful. Okay. Here's how it works. Okay. Let's do, year 1, 2, 3, 4, 5, 6, 7. And then we can do return 1, 2, 3. I don't know if this is right. We'll just start here and see how it goes. All right. So in the United States of America, if you're a corporation, your corporation can set up a retirement program for your employees or your shareholders, your stakeholders, not employees, stakeholders. Okay? Because you're not an employee, you're the owner. Right? The UBO, the ultimate beneficial owner. So anyway, so your corporation sets up a retirement account on your behalf. And your corporation pays taxes, right? Even if it's an LLC passing through to you, your corporation is before you. And so when it passes through to you, you pay your taxes. Okay? However, you can take money out before you get to that have to pay taxes part. Right? Before you pay the government, you can pay yourself. Your corporation does it because your corporation loves you because you are your corporation, right? So anyways, you can put $50,000 a year. It's a little more than that. Okay? $50,000 a year into your retirement account. Okay? And then in year 2, you put $50K. Year 3, you put $50K. How much are you paying in taxes on these $50K? You're going to pay taxes later, so you're deferring. So each year you're putting $50,000 into your retirement account. $50,000, $50,000, $50,000, $50,000, $50,000, $50,000, $50,000. And you do that for 10 years, you got $500,000 in your account. And you're like, oh my God, that's a lot of money. That's what, sort of newer, younger folks tend to forget, that there's the way that you retire with millions. And by the way, I told you just the other day, about 2 or 3 weeks ago, I told you that you need somewhere between 2 and 5 million to retire in the United States to maintain your lifestyle. That number officially has changed because of inflation. I forget who put it out. I think it was Morgan Stanley or Bank of America, one of the big ones, maybe JP Morgan. But the numbers have changed, and you need now a minimum of $3 million. And it's just inflation. You're like, oh my God, it went from 2 million to 3 million? Yeah, inflation. That's why it hurts. It just cost you $1 million. But nonetheless, if you were doing this, okay, you're doing something very successful. Okay? Now the thing is, this is compounding 8% a year on average every year. So in year 2, okay, let's just say 10%. Okay? 55. Year 3, 61. 67. Okay. 72. Okay. Year 6, year 7. Okay. Okay, go back to pink. 80. 88. Okay. And the next one is 100, let's say. Let's just put it there at 100 in 8 years. So I'll throw an 8 over here. Okay. Now check this out. 8 years has gone by. I want you to think about how this is important. 8 years has gone by. You're averaging 10% a year. You're not paying any taxes. And the first $50,000 you put down into your retirement account is now $100,000. What do you think of that? But that's just your first year. Okay. Now your second year is doing that. Okay. Okay. So in that case, so if we went for 8 years, you'd have 100,000 here. You have 88 here. You have, on year 3, you have 80. On year 4, you have 72. Year 5, no, year, make sure we're here. Okay, 67, 61, 55. And then in year 8, you put your 50 in, okay? Okay, so you're on year 8 of your Forex fund. I want you to bear in mind, all you are doing is avoiding paying taxes today. You were going to pay taxes anyways. This is you deferring your taxes. So on year 8 of you doing this as a Forex manager, you have 100 plus 88 plus 80 plus 72 plus 67 plus 61 plus 55 plus the 50 you put in this year. And now you have $573,000 in cash in your retirement account in 8 years. So if you have a 20-year career, remember this keeps compounding. In 16 years, this is going to be, well, let's say in 20 years, this is going to be pretty close to 300,000, but let's call it 250,000. Okay? That first 50,000, all you were doing is avoiding paying taxes on the 50,000. Now, of course, you can't eat your 50,000. You can't go on vacation, right? No champagne bottles at the nightclub. Okay? Boot-up, 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 right? No models and bottles. No Lamborghinis. Okay? Because what you're doing with just your tax strategy is you say, I'm not going to spend my 50,000. I mean, dude, you can lease your Lambo for 50K a year. No, instead of that, you're going to turn it into 250,000. So when you decide you don't want to work anymore, you've already saved 250,000. Think of it. Now you can spend your 250,000 when you don't want to work anymore. And your Lambo that would have been 250,000 is worthless. Okay? It depreciated, right? If you buy a Lambo for 250,000, in 20 years it's worth 50. You're doing the opposite. You're losing money. Okay? Okay? Oh, good morning, Emmanuel. So anywho, it's a retirement account. And that's what you want to do. Defer your pleasure, but all you're doing is avoiding taxes. You get your money back, and then later when you take out your 250K, you pay taxes. And in fact, in the United States, at some age, I think it's 71, they start forcing you to take the money out. Because why do you want to take the money out if it keeps compounding, right? But at some point, you have to take it out. So just avoiding paying taxes today, being smart with your money, but meaning you don't get to keep the 50,000. You were going to pay taxes, which means you were just going to put it in your pocket. Okay, you see what I mean? You were going to just get the 50,000. That was part of your profit. You would have paid taxes today, and then you would have spent it on vacation or a fancy car or a watch. No. That's where you're like, no. I'm going to tuck this away and invest it and grow it. And you do that for 20 years. You definitely have millions of dollars. But you're supposed to. That's the whole point I think a lot of people miss. You're supposed to. Okay? You're supposed to. So this, for many, their Forex trading account becomes their first vehicle to be able to do this, right? Where you should incorporate, and then you set up a retirement account. And it has to be done by lawyers or a wealth manager or something. Like it's a legal entity, right? It's like your corporation is a legal entity. This is you don't just have I'll have this account. No, it's a special account designed specifically. It's a corporate retirement investment account, and your corporation contributes the money because your corporation would have paid the taxes. So if the corporation puts the money in the account, but you are listed as the ultimate beneficiary owner, right? So you never touch the money. It goes from the corporation to your retirement account, but the cool thing is you're the manager of the account. Okay. So anyway, so that goes back to kind of Frank's question. So in that case, Frank, I don't day trade that. There's probably negative consequences to that, but I do invest. Yeah. Yeah, it does, Darko. Yeah, Darko mentions the positive swap on nat gas. Yeah, and Kishore also is on that trade, Darko, because of the swap. Okay. But the basis of the trade was the arbitrage. Okay. And of course, many people don't understand that. Like I'm certain there are people, they can't believe this is happening. And the reason they can't believe it is they don't understand why. And why did it just happen out of the blue? This is so ridiculously bearish. It dropped from 10 to 2. Why is it just rallying? Why is it up 30% in 4 days? It's because they don't know. And the cool thing is we knew exactly to the candle, which is cool. So anyways, bravo, bravissimo. But it's just part of trading. That's why you really need to know your domain, as they say. If you're going to trade energy, you need to know energy. You don't just trade it like it's colors on a chart. Neri says, trading as a corporate business makes sense. It makes sense, Neri, if you make a decent amount of money or if you're losing a decent amount of money. Because then it'll move away from ordinary income to, like there's tax advantages and stuff. So, as a corporation, you can write things off. I don't do a lot of those strategies. I'm not a tax guy. So they're like, I can write off my use of my home office. I can charge my corporation rent and call that an expense. I don't do stuff like that. And the reason for it is you get audited and they come out and check to make sure you're doing it right and all that kind of stuff. I'm like, you know what? To me, it's so little money. I'm like, I'm not going to do it. The audits are too expensive, right? So you're like, nah. So I don't do all that kind of stuff, but you could. But certainly like when you buy computers, you buy a laptop to trade on, you buy a desktop to trade on, your screens, all that kind of stuff. Yeah. Oh, I write that off. Oh, for sure. Some of the travel, if you're meeting with clients and taking them out to dinner and you're traveling and on airplanes and staying at hotels and doing Ubers. Oh, I write that off. Oh, for sure. Okay. You write that off, which means you might have spent last year, let's say I'll make up a number, $30,000. Okay, on various stuffs related to your business. So it's like your business didn't make the 30,000, so you wouldn't be taxed. You had your money come in and you spent it on running your business, and therefore they have to say, well, that 30,000 that came in and then went out, well, you don't get taxed on it coming in because it went out running the business. So that's a write-off. So it's like you never made it, but you're like, but you got to go to Dubai and you got to, fly in first class and you got to stay in a nice hotel and you had a few nice dinners with a few clients and you're like, you got to live that life. And according to the taxes, it didn't exist money-wise. Cool. Okay. And to make it even better, you might as well just speak at a conference. So they're like, because very often if you get audited, they're like, who did you meet? At what time did you meet? Do you have, do you have documentation? Do you have a meeting agenda? Did you send them a meeting request and they confirmed it? Like, can you prove it was on their agenda? Can you prove this happened? And you're like, well, I was a speaker at the, let's say, the Forex Trading Expo in Dubai. And here was my time slot. And I stayed at the hotel relative to the conference, And you can watch the recording if you want. And they're like, okay, that's good. And then you're like, and then after I met with this person and here's the meeting. And then I met with that person. We went out to dinner and here's, and all that kind of stuff. And you're like, oh, it's all related and it's all business. Okay. And you're like, yeah. So the accountants go through it and there's rules and, some of these things you can't write off fully and some you can write off fully. But at the end, it was the money you would have paid in taxes. Cool. All right. So we're getting closer and closer to the stock market open and that arbitrage coming together. We already looked at the stock markets using QuantBox. Okay. Okay. Check this out. A big change here. Okay, big change here on the ASX. And notice it did kick off a support pivot. Interesting. Probably related to China, maybe. Maybe related to the Reserve Bank of Australia. Look at that. They're so far behind, huh? They're so far behind. 8% inflation, 3% interest rates. They're so far behind. So far away from me. So far I just can't see. Anyways, lots of interesting things going on. Yeah, it's just so low compared to where it should be. So much to read. This coffee is good this morning. Oh, that reminds me, because I was just going to make a comment that I got ghee in here. Fat. Speaking about fat, today is a big day for me personally. I hope you don't mind me sharing. But about 18 months ago, I had a business trip to New York City. And I bought a new suit because my other suits were tight. So I'm like, oh, I got to get a little bit bigger of a suit. So I I zip over to a store. I buy off the rack, Ralph Lauren, navy blue, size 34 pants. Great, cool. Throw it in the bag, boom. Get on the plane, boom. I'm in New York City. So the next morning I got my business meeting and I'm like, oh, cool. So I throw on the pants and I barely can button these pants up. 34s. And like my belly is like pouring, spilling over the top of these pants. And the button, I'm like, I think the button's going to break. So I'm like, oh my God, like, what am I going to do? Like maybe undo the button and then kind of jiggle my belt a little bit. Like nobody will notice. I'll wear my tie long, like no joke. Right. And I'm like, fudge, I got to do something about this. Right. So anyways, today, for the first time since like 1988, I bought pants that were size 31. The same waist that I had in 1988 when I was a teenager. And I put them on and they fit wonderfully. I thought they were going to be tight. They fit wonderfully. Like, yeah. Holy crap though, huh? 31s! And they fit wonderfully. They're comfortable. Yeah. So thank you. Holy smokes though, huh? That's a lot. Yeah, thank you. I mean, that's actually skinny. Like that's too thin, I think. But that's where I'm at now. So I got to put some on, right? How much did I lose? I haven't had a weigh scale for a while now, but on the order of 40 pounds. I think I was just shy of 200 pounds. I was probably $1.95. And I'm probably 160 pounds. I might be smaller than that now. I don't even know. Yeah, no exercise. I don't have time for exercise. Although I started lifting weights now because I'm trying to actually put on weight. But anyways, waist size. But like, did I exercise? No, I was watching Walking Dead with my kid last night and drank a liter of beer and ate a bag of pork rinds. So that's my diet. Yeah, I'm sure. Hey, Blue Boy. So anyways, just funny. So anyways, but size 31 it was today. I just ordered them and they showed up last night and I put them on. I'm like, dude, these are perfect. I really thought they were going to be tight. Like, no, I got to go with the loose 32. No. They're perfectly fine. So I'm quite surprised. Well, Richard, it was filmed right here. I've been to Alexandria. I've been, the town that what do they call it? Where the governor ran? What do they call it? Mayberry? No, that's, my mother-in-law owned property in that town, which they call, Woodbury. It was called Woodbury in the thing, but no, like literally on right one street behind, she owned property there. So anyways, yeah, it's all right here. All right, so la-di-da-da, looks like a bouncy day. And bouncy days are because we've already hit targets, many targets. So be ready for like, I know this is hard to see, but it's because we've put a lot into this. But you can see what I have is a down, an up, and a down. And what's actually happened was a down, and now I think the up, and then the down. So, projecting 2 or 3 weeks in advance, well, that's a difficult gig, right? So it looks like, I had it coming up Thursday or Friday of last week, so maybe it comes up on Monday. And we have a bit of an up for a while, followed by a pachow. Now, one of the things we talked about last night in the day trading group is a lack of news. I mean, we have news. We have a lot of real estate news this week. I mean, maybe I should pull up the calendar. We have a lot of real estate news this week, like Case Shiller, and there's like housing starts or something today. Like there's stuff, but NFP, non-farm payrolls, has been pushed a week. And I think that gets you to a situation where those that trade on hope start trading. Because as Denise said, no news is good news. And okay, right. But she's right. Like that's how the market would trade. And that scares me a little bit. Because that's a threat to my risk off position. Okay. So anyways, durable goods. I don't pay attention to durable goods. They're too volatile. I don't really care. Okay. Aussie retail sales, probably important, coming up. Okay. GDP out of New Zealand, that's coming up. Remember, it's getting crushed. So maybe not good news there. ADP is this week. See, this is misprinted. That's probably where I got. We looked this up yesterday. This is wrong. That's interesting. That's what I would expect, but that is wrong. ADP probably is correct. Okay. ISM manufacturing is another biggie. German unemployment, so Wednesday is a pretty big day. ECB meeting Thursday. Where's all this real estate news? It's not coming up on this calendar. So I don't even see like Case Shiller on this. I guess they have it low. Okay, pending home sales, that's now, today. Okay, that's good. That makes sense. And then I think Case Shiller's tomorrow, isn't it? Housing price index. Okay. So a lot of that stuff coming in. I expect at some point high interest or high mortgages would slow down the purchase of homes, but nobody's selling homes either. So when you don't sell, prices don't come down that much. But those that do list their houses, well, the buyers have to pay higher for a mortgage, which means they can afford less of a house. So you end up getting, for the same price, you get less of a house. Even if the price doesn't change, the borrowing costs change, so you get a smaller house. So that kind of indirectly affects things. But with rents high, commercial properties stay high. So I don't expect a crash in that market, but maybe a slowdown. But remember, about a year ago, I bought the housing market and I paid less than book value, which means I bought up all the land that the home developers owned and paid and got a discount. I got a discount. The if you added up the value of all the stock, it was worth less than the amount of land the company owned. So back then I gave an example of when I bought Apple for $6 a share. Apple was worth less when I bought it than the amount of cash they actually had in the bank. So let's say they had $1 billion in cash. If you added up all the Apple shares at that time at $6 a share, it was, let's say, 600 million, but the company had $1 billion. So you could literally buy every share of stock of Apple and make money because, well, you own the company now. You can just take the money out of the bank. There's $1 billion. You turn a $400 million profit, right? So I bought those home builders back then, and they're profitable now. And yet the industry, as we saw, is kind of going sideways to nowhere. Okay, so kind of interesting. The other place I think, so anyways, I don't think we're going to get good news out of the real estate market. I don't think it'll end up being bad though, but because the thing is, home buyers can't afford to buy as much because the rates are higher, but sellers don't really want to sell. So that's the interesting thing, right? So there's low inventory and all that kind of stuff. So, but I think what we will see is retail sales ex gasoline, I think will fall. Unless gasoline prices fall again as well, but they generally don't because of the driving season. So anyways, I suspect that, retail sales ex gasoline, we'll be able to watch that over the year. Okay. So tomorrow API, then EIA on Wednesday. Okay. ADP and JOLTS. Okay, that's big. Okay, here's your EIA. You're so far away from me, so far I just can't see. I think he just builds, huh? So what this is show you, you can look at it like, if you're not sure what I'm looking at, think of it as this way. Okay, and there's standard deviations that say, well, I'm trying to get that parallel, but okay. All right, we'll keep that one. We'll keep that one. Good job, Wayne. Okay, that looks like inventories are going up, which means prices should go down. Cool, right? Cool beans, Bubba. Okay, we're back at 4K. Back at 4K. Definitely a bounce day. On the metals side, I forgot to mention on metals, I got out of palladium on Friday. Oh, oh, gee whiz, look at that. Thank goodness. So that one I got out, I think I had about $300 of my cash, short palladium. I picked up, I think, about $20 or $30 in yield. So let's say I got 10% of my money back on a positive swap because I was selling palladium to buy US dollars and dollars pay me money. So that goes back to our conversation from the very beginning of today's webinar. So anyways, but I got knocked out with $1,500 on the mini lot in about 10 days. So 500% return on investment. Okay. Bouncy days on some other things. Okay. But as mentioned on the XAU, let me go back to commodities. Okay. So we have an update on gold. I just want to remind you, we've known this was likely, not like what I discussed in the day trading group yesterday, and actually quite a bit lately, we've been talking about the idea of probabilities. And so what this chart says is there's a higher probability of this occurring now relative to before. So yeah, this might fall again. Okay, right? So what you do is you go ba 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 ba, and your choice. And again, we talked about this last night before these green candles. Your choice is to to get out or to add. And if you didn't have this green zone below us, remember, this is just part of our analysis. Not everybody has a green zone below them. So they're not looking at that. So if you didn't know that, you would add, wouldn't you? So if I go to my indicator list and I get rid of FX Bootcamp pivots, okay, you would add another, wouldn't you? You would change this narrative to look like this. Am I right? What this chart doesn't show you, and that's the issue, is suddenly out of the blue, there's also a pretty high probability of this occurring next. Much higher than before. And then I would say, then back down. So I would still sort of like, okay. So I think this is what the chart says. If you, okay. Anyways. Okay. So I have to make a decision. What do you do when you suddenly enter into this short term, might go down, might go up? Well, jam a stop or take your profit, right? Know when to walk away, know when to run. This might be a time to run, son. Run, Forrest, run! Okay. Now, the interesting thing is, if you don't have all the tools, you don't realize this is different than this. So what would you do? Sell, 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 right? You would do that forever. The thing is, okay, you're trading something lagging. That's the problem. Now, sometimes this works, and this is what happens. It will just keep going, and you're like, oh, okay. But sometimes it's helpful to have a leading indicator. Okay? Sometimes it's helpful to have a leading indicator. Let me show you a new leading indicator. I'll put a different one on. This is called biased pivots. Okay. I'm a bear, so I put it in a bearish mode. I want monthly. Okay. And I hit OK. And check it out. What does it say? Bearish, profit, target, conservative. And I knew that on February 1st. Technically, actually before February 1st, but let's just say it was locked in stone. February 1st. That if you are a bear, that's your conservative profit target. Which means it might fall down to the bearish aggressive target. But it also means there's a higher probability now, higher than here, higher than here, higher than here, because it could always go up, higher than here, higher than here, higher than here. Okay. Actually, that's actually pretty, I'll remove that. That's actually a pretty bullish sign right here. But anyway, so it says bears might start taking profit on this. Therefore, bears become buyers and buyers push the market up. You see? And so wouldn't that be useful information? And that's a leading indicator. We knew that 26 days ago. So now that I'm here, I'm like, ooh la la. So you decide, what would you do? What should you do? What would you like yourself to do? Cool. By the way, I've held that trade now. This is the 4th week. Remember, one of my goals that I set forth a while ago was to show you how to hold trades longer. And I've been holding trades for 2, 3, 4 weeks. So I held that Mexican peso trade for 3 months, took profit, and then I re-entered, and I've been in that for almost a month. So I hope I'm showing you how to hold your trades a little bit more, a little longer. And I hope you appreciate it. I hope that's something that you're also looking at, trying to do. Yeah, hold on demo. But that's the thing, right? Meta, test. Okay, WTI coming down back to 75. Go back to the dollar pairs. So dollar weak today. And so I'm short USD Mexican peso, which means I'm selling dollar. So I'm probably doing okay. And I'm hedged with euro dollar, which means I'm probably losing. So I'm doing okay. And I'm probably not doing okay, which means hopefully they offset each other about the same. But notice I'm earning income on both positions. So one thing that I'm practicing here, and I might start doing this with gold instead of euro. I might offset my USD Mex, like ultimately what I'm saying is that's my hedge, not euro dollar. Okay, but the original intent was, because you see how I sold them about the same time? So I'm buying dollar and I'm selling dollar to offset. But in that period of 2 weeks, I've collected $20, $10 a week. Okay, $10 a week. 520. Let's just call it $500 at the end of the year. And I have about $250 in my cash. So if I hold these two a year, I'm guaranteed to, right, double my money. I turn $250 into $500. Guaranteed, as long as I hold it a year. So what I'm trying to do is hedge. And the theory is like, so this one is up 200, this one should be down 200. So I have a bad hedge. I'm making money on both sides. Okay, whatever. But what I'm trying to do is say, hey, wouldn't it be cool if I can engineer a way that I make 0 pips and walk away doubling my money? It's a noble cause. Don't you stink? Cool. Made a short on oily. Oily. Okay. So a lot of caution I have today, even though this is a decent performer, I'm cautious on this one as well. Kiwi is very weak today, but when I look at this chart, that says stop selling. It doesn't say buy as a bull. Definitely doesn't say that. It does say you could buy as a bear. So, but what you should do is if you looked and saw Kiwi being weak or Aussie being weak, you probably, okay, when you look at that chart, it should caution you and say, not this one, not this time. So you want to sell Aussie, maybe you should buy pound Aussie today. This is usually using pure price action. Okay. Okay. I don't know what time frame you're using, but notice, pretty simple stuff. Higher high. Oops. Okay, pretty simple stuff. You got a higher high. An H. Boy, this mouse. Okay, higher high. So what do you look for after an HH? HL. So typically what you do is you go somewhere around there, eh? Maybe add a little more time. Okay, so you would do it this way. Okay, let's delete this. You're going to say somewhere between and here. Okay. Cool. So now you have to go for the future. And you'd continue doing that. Now on a smaller time frame, right? There's other things you can do because you can see like your strategy might be this. This is strategy. Higher high, higher low, somewhere between the first and the second is going to go like this. So you can say your strategy could be something like this. You just don't know, is it this support or that support? It's the same as a Fibonacci. And in fact, you look at it and you're like, dude, that is a Fibonacci. Okay. You just don't know, is it going to be 3A2 or 618? You understand? But you should know you're buying the dip. What amateur traders do is they sell the higher high because they're counter trend traders. We were talking about this in boot camp, how newer traders seem to be better at counter trend trading. But I'm like, oh, good, half the reward and twice the risk. So you're like, that's terrible, actually. So anyway, so being ready to buy the higher low is so important. But then again, you don't know which one. And so like if I zoom in, keeping it on the hourly chart, so I'm not changing anything because you already know, okay, let's delete this out now. You already know as this is falling that as it falls to that arrow, your intention is this. You just don't know if that's going to be the rollover, but you're looking for the rollover. By the way, this is what we do at FX Bootcamp. Okay. So I won't necessarily tell you you should buy it at 176. Well, I don't know the future. I don't know the future. But I'm teaching you how to do your analysis so you can have an opinion and you can trade your own account. So in this particular strategy, you're combining pound and Aussie. Well, pound is strong today. Aussie's weak today. We know that through fundamental analysis. It's called relative strength. Cool. You already know there's a higher high. So you're already looking for a higher low. One of your lines in the sand is here. The other line in your sand was somewhere around here. So you already know if this rolls over here, you're a buyer. But if it falls and rolls over here, you're a buyer. And if it goes further down, probably not. It's fallen too far. Maybe the pound Aussie's over. Okay. So that's how I teach you to trade. then the rest is price action, right? Okay, inverse head and shoulders. It's actually a crown pattern. And you might like this tool. I don't know. What do you guys, do you like this tool? It highlights right here. It says continuation. Okay, continuation. Continuation. See? Now, this, right, this is just a tool, but I've been teaching this for years. I call these things role reversals. Right? Up, 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 down, down, buy. At the role reversal. What used to be resistance is now support. Up, 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 down, down, buy. What used to be resistance is now support. Up, 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 down, down, buy. What used to be resistance will probably become support. So the current plan is maybe something like this, huh? But price action doesn't really tell you the end of the line, and so but it is a leading indicator. Why is it a leading indicator? Because when you break resistance, you know in the future you want to buy at support. You want to buy the role reversal. And this indicator says continuation, continuation, continuation. So it's helping you. Okay. In the back of my mind, I would measure a top coming somewhere soon, and this is a bottom, and then you'd probably, right, you want to connect these. Say 50%, 382, 618, and at some point on a higher time frame, you're probably going to have something like this. Don't you stink? Smell like a plan? So we spotted this one right away. And so my super secret fundamentally based alert service, one of the benefits immediately is to stop getting into random trades for random reasons. And I would suspect you will get better results. Oh, but I always trade euro dollar, Wayne. It's my favorite. That's one of your largest limitations. It's your favorite, huh? That's a limitation. Right? That's a limitation. Why not trade the best? For fundamental or strategic reasons. You know what? I'm tired. I think that's it. I'm done. I'm spent. Ich kaputt, ja? Now I could pass around a plate and have you put in a nickel, but why don't I just ask you to click the thumbs up button? Would you do that on your way out? So I'm looking forward to trading this week with you. Remember, there's no non-farm payrolls on Friday for some strange reason. But please click the thumbs up. Only 50% of you have done it. We went over metals like gold and palladium. We went over oil. We talked briefly again about the natural gas intra-market arbitrage. We talked about the Pfizer-Seagen merger arbitrage play, which is probably happening right now since the market is open. In fact, let's take a look one more time before we end. Let's take a look and see what's happening on those Pfizer stock price. Let's quickly look. Pfizer is currently down 1% today. That's not a big deal, but we did say it would go down. Seagen stock price. And we said this one would go up. So this one is up 12% today. This one's down 1% today. And I was able to sit with you guys and explain exactly why in a casual, hopefully informative and entertaining fashion. Very cool. And I recommend that you watch the movie Wall Street. And you can say and try to follow along, because there's a few different examples that they're using there in their merger arbitrage strategies. So now maybe watch the movie again, kind of understanding that they secretly want to buy the stock of target companies before the target premium hits the stock price. So like this deal has not happened yet, but the stock price is up 12% today. So imagine you were buying it 3 months ago. Okay, so imagine you were buying it at 128 or 117. Okay, you started buying at 120, and now suddenly you're up 50%. So you wanted to buy it. So if you were Gordon Gekko, you're buying on all your accounts at 120, and you're like, go all the way to 140. Buy as many shares as you possibly can. And then suddenly, boom, you're up 30, 40, 50%. And the deal hasn't even happened yet. And of course, the risk is you find out that the Securities and Exchange Commission won't allow it to happen because of maybe possible monopoly issues. Guess what would happen? This would drop and this would rise. And some people are going to do that, by the way. They might look at this deal and say, what's the probability that the deal doesn't go through? So others are going to wait and see if they get challenged, and they might be taking the other side, and they might sell this only if they do research. So you might bring in consultants and all that kind of stuff. And like, hey, is this going to go through? Is this going to be allowed? What's the deal here? And you might find out that, this might throw some red flags. And they're like, really? So someone else might, therefore, want to sell that and buy. Okay, but anyways, that's the opposite. I doubt they're doing it now, but that's that. Cool, right? So thank you for being part of the community. Thank you for that thumbs up. It helps, maybe, I think. I don't know. I don't know what helps YouTube. But anyways, let's just leave it at that. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. Hey, that just happened.